Yes, it's true that a family member can cover your mortgage down payment, but you'll need to understand the rules so that it's a smooth process for you and the one giving the financial gift. So let's break down a few key factors for using down payment gifts for conventional loans. Down payment gifts can significantly reduce your upfront cost, making homeownership way more attainable. They are given by eligible donors to help cover your down payment, closing costs, or financial reserves. For conventional loans, gift funds are allowed on a home that will be your primary residence or your second home, but they are not permitted for investment properties. Acceptable gift fund donors include relatives by blood, marriage, adoption, or legal guardianship. And certain individuals with close family-like relationships may also be acceptable. Some examples are fiancés, domestic partners, and godparents, but check your situation with a lender. And recently, Fannie Mae started allowing gifts from the trust or estate of an eligible donor. But here's where things get interesting. In certain situations, gifts from unrelated individuals are acceptable. Wedding gifts, with the proof of marriage and evidence of deposit. Graduation gifts, again, with proof of graduation and deposit records. As mentioned, gift funds can be used for down payments and some other costs associated with the loan, depending on the loan type. So even if you have your down payment saved up, an eligible donor can pay your closing costs and pad your bank account for emergencies after the purchase. Gift funds cannot result in cash back at closing except for earnest money refunds, so make sure you use all the gift funds received to buy down points or prepay taxes and insurance at closing. What about documentation? Can you just show up to the closing table with a stack of cash? Nope. You'll want to plan your down payment gift carefully. To properly document gift funds, you'll need 1. Proof of donor funds. This can include bank statements or account documentation showing that the donor has enough in their account to provide the gift. 2. Proof of fund transfer. This includes deposit slips, canceled checks, or electronic transfer records. And 3. A gift letter. This is a letter that includes the donor's name, address, phone number, relationship to you, the gift amount, and a statement confirming that the repayment is not expected. This is where some tension can arise with the donor. Often, they don't want to provide their bank account information to the lender, and that's understandable. In this case, the best option for them is to write a check directly to the escrow office, and then they need to just provide a copy of that check. Here are a few avoidable potential challenges. Ask the lender early in the process what documentation they require from the donor. If your donor isn't related, some lenders may offer non-conforming loans that'll allow it, but the rates might be a little higher. Gifts are tax-free for most donors under annual and lifetime exclusion limits. Check current IRS rules for limits and always consult a licensed tax professional before proceeding. In most cases, gift funds can cover the entire down payment and closing cost. However, for a second home or a multi-unit primary residence with less than 20% down, buyers must contribute 5% from personal funds. Reduced to 3% for home ready and home possible loans. Utilizing down payment gifts can simplify the path to home ownership, especially for first-time and budget-conscious buyers. By reducing the financial strain of upfront cost and ensuring compliance with lender guidelines, you can maximize the benefits of these gifts. For more information on buying a home with the help of gift funds, visit mortgageresearch.com. If you found this video helpful, please like and subscribe for more tips and hit the notification bell. You'll never miss an update. Got questions? Drop them in the comments. We're here to help. Thanks for watching and best of luck on your home buying journey.